I just want to get your reaction first to the Fed cutting by 50 basis points. Some people were surprised. Some people were forecasting it. How do you see the cut, and how do you see the market reaction? Yesterday we closed lower, but now you see markets popping a bit.
Yeah, Frank, it was definitely a historic move. It's very much out of line with what we've come to expect from the Fed. Typically, a 50 basis point cut has come against a backdrop of asset price bubbles bursting, financial systemic risk, mass job layoffs, and actually none of those have been present. So it was a little bit unexpected given the strength of the economic backdrop, and Powell himself had a very, I think, positive assessment of the US economy. But actually, the other part of it is that they have very little to lose because inflation does seem to be somewhat contained. So why not just move ahead and make a fairly aggressive cut and give a very, very clear signal to the market that they are there to assure and secure a soft landing. So as a result, although markets maybe had a slight disappointment yesterday because Powell hadn't indicated that there were going to be further 50 basis point moves, I think the broad perspective, which is how the market is responding today, is that the economic outlook has improved. Recession risk has essentially collapsed now that the Fed has signaled that it's really assertive and intent on avoiding recession. And so from here on, we are expecting the market to make some fairly significant gains.
All right, so you're expecting the market to make gains. You're also, in your mind, you're seeing the U.S. economy is pretty strong. I want to bounce this off of you. This is a tweet from Howard Lutnick, the CEO of Cantor Fitzgerald, obviously a very notable market voice. He said, in part, 50 basis points is a big red flag. Remember, the Fed has much more timely economic data than the rest of us. This means our economy is in much worse shape than we all thought. This is a bad sign for the economy heading into November. It sounds like you just completely disagree with him, but is there any possible credence in this? Because, in fact, the Fed does have more up-to-date economic data than the rest of us have.
So I would disagree with that. I mean, you know, it's true the Fed does have a little bit more data than the rest of us do, but actually not that much more. They are also tracking the same kind of surveys that we are. Certainly, we talk to our clients around in the US, and we get a very, very clear positive picture. Of course, there are pockets of weakness in the US, but broadly speaking, it is still a picture of strength. And I think historically, yes, a 50 basis point move would have been considered evidence that maybe the Fed knows something very concerning and actually the economic outlook is deteriorating quite rapidly. But actually, I mean, Powell went to lengths yesterday to really play out the scenario for the US economy, which is he described the labor market as still very solid. He thought GDP growth is strong, and even the economic forecasts see growth slowing to only 2%, which is actually slightly above trend. So okay. I would disagree. I think this is still a good story for the US.
All right, let's get a bit more granular. We just mentioned just a short time ago that Russell futures are the best performers right now in the pre-market, up over 2%. Yesterday, we saw the small caps. They finished the best out of all the indices, just fractionally higher, but, you know, actually the best. And also banks up almost 0.5%. So in your mind, is this cyclical trade? Is that going to just kick off from here, or do you see opportunities in other trades going forward after what was a bigger cut than many people expected? Some people saw 50, but many people thought it would only be 25.
So I think this is the return of the cyclical trade. You know, typically the areas of the market, at least, which are performing well at the moment are the ones that are most interest rate sensitive and do well in a fairly steady economic backdrop. So that's why the cyclical space is doing well. That's why financials are doing well, and certainly small cap as well. From here, though, I do think investors are going to be looking at valuations and saying, yes, we know that the economic backdrop is still solid. There is a slowdown underway. It's not going to be a recession. So do we want to be focused on markets where valuations are very, very frothy, or are we going to look to other opportunities in the market where valuations look fairly attractive? So it does suggest that there could be a further broadening out of the gains. But I think with an additional focus on those sectors of the market that are exposed to economic growth and will do well in an environment where there is still job growth, inflation is contained, and the Fed is still cutting rates.